Good morning. It's Wednesday, November 23rd. This is Mike Mock with Lansing Trade Group's morning comments. Let's review, first of all, what's going to happen with holiday hours. We do have a standard session today that will end at 1:15 Central Standard Time. Tomorrow, Thursday, Thanksgiving holiday, the rest of the world will be trading, but we won't, and there will be no Thursday night session. So we won't reopen in Chicago until 8:30 Central Time on Friday, and there'll be a shortened session. Then it'll end at noon on Friday. Then back to as normal starting next Sunday. As we mentioned, the rest of the world will indeed be trading. China tonight, Europe tomorrow, and we will post a video Friday morning, although we'll probably do it just a bit later to make sure we get a better handle on what the opening call might be for Friday morning. Looking back to yesterday, actually going back to last Friday, we talked about there was a strong seasonal for the market to rally into the holiday, led by soybeans, and that really followed the script. Actually, we're kind of surprised how well it did. The bean market, really soybean meal prices, led by very active Chinese pricing. Probably a bit of Chinese spec buying, have driven the meal market sharply higher here, back above 325 in the front end month. We think this is a little high, particularly relative to consumer interest, and we don't think the user will chase this price, but again, still very dynamic, and the market's building a long position, an even greater long position as we approach the holiday. So yesterday we suggested that growers take a really hard look at something along the line of a 980, 1060 min-max. We had some uptake on that. We think that's still the way to go here. And even in new corn, we had some interest, with some folks setting 370, 380 floors financed by 420, 430 ceilings. We think that's the way to go. Now, overnight, we saw a little bit of a reversal. All the grains are lower. And again, it's interesting. When we're stronger, it's led by the oilseed complex, and when we're weaker, it's wheat and corn that lead the way. All these markets, as we record this video, are 3 to 4 cents lower and appear vulnerable to more weakness. A reminder also, Friday's the last day for December options, so there could be some interesting things develop in terms of open interest and that sort of thing we'll talk about next week. But the rally that we had this week, we think, is a reminder that when we see opportunities where prices put us in the black, where we have an opportunity to lock in profits, we need to take advantage of this. We still think that, as we had that special video over the weekend, that the bullseye is still on the U.S. farmer. He's placed in a less competitive position because of the currency situation. That really hasn't changed much. We've also mentioned over the last few days that the cost of money is going up. That also tightens the margin. So we have to really have a sharp pencil here. We have to be very, very sharp about how we handle the balance of our old crop, especially in corn. We still have too much ownership, need to whittle away at that a little bit. In the case of new crop, establish a solid cost of production. If we get modest returns, we need to lock some of that up early. That's all I got for you now. I hope everyone has a safe and happy Thanksgiving holiday, and we'll talk to you first thing on Friday morning.